Today is Monday, November 9, and this is a post-market review for the stock market activities today. And what a thriller of a day it was. If you thought action movies are interesting, think again, because all the action is in the stock market. We will cover everything that happened today from a technical perspective, from a psychological perspective, and I'll give you a lot of clarity from the analysis today. The most important segments in today's discussion will be the heat map analysis, the rotation trade, and I will add my portfolio. I will show you the names that I have right now, an update on what happened, and if today's activities in the stock market will make any changes in my portfolio. Furthermore, we do have charts. Plenty of them. SPY, Qs, VIX, TNX, TLT, Dollar Index, Apple, and I have trade ideas for you. 2 names to short, 2 names to buy. And at the end of the video, we will conclude, sort everything through, and give you an update on the outlook for the week. And before we start, here is a reminder of a tweet I released today. It says, some of the action today will stick and gain momentum, but I also see some knee-jerk reactions too that are likely to reverse. And as we go through the charts and the rotation trade and the heat map, I will tell you which trades I think will stick and which trades were just a result of a knee-jerk reaction due to the news we received today from Pfizer. With that being said, here we go. The Dow Industrial Average up in the green, 834.57 points, or a gain of 2.95%. The Nasdaq, which happens to be the laggard of the day, can you imagine that? Down 181.45 points, or a decline of 1.53%. The S&P 500 in the green, 41.06 points, or a gain of 1.17%. Moving on to the sector's performance, energy powering the market to the upside today and capturing the gold medal. Silver goes for financials and the bronze for industrials. What is lagging the day? Technology, consumer cyclicals, aka Amazon, and I say that because the majority of the consumer cyclical sector were actually up. But again, Amazon's waiting, and these morons, when they decided to add Amazon to the consumer cyclical sector, it distorts everything due to the massive weight of Amazon. And the same story for the next laggard, communication services. Facebook distorts everything. But rest assured, this is why we sort through the heat map analysis. But for now, we're moving on and we're covering the action in the futures market today, starting with the massive gain in crude oil, up over 7% today. What's going on with softs? We talked about lumber yesterday as a very important indicator for the sentiment in the economy for the next few months. Lumber, lean hogs, grains, and metals, but specifically copper. You see lumber up over 6% today. Coca up over 2.5%, but muted action across other softs futures. What's going on in metals? Gold, silver, platinum got whacked today. And by the way, this is the part where I say we saw some knee-jerk reaction. I think the decline in gold is not warranted. And I do believe that today's decline was an opportunity to buy gold. Yes, we saw a surge in the US dollar, and you see the USD up about 0.65% today. However, you have to distinguish between a shift in momentum from growth to the reopening stocks and between assuming that the crisis is over and gone and just dumping gold, assuming that we are not going to have any inflation. So again, knee-jerk reaction, and I think gold will reverse to the upside very soon. What about meats? Lean hogs in the green, feeder cattle, live cattle, no stopping sign. These two things been skyrocketing for weeks and weeks right now. What about the action in grains? Muted, not a lot of movement across the board. We just saw some gains in oats and canola, but that is about it. Grains are waiting and waiting to see what happened, and I am bearish on grains for 2 reasons. Number 1, we saw countries like China stockpiling on soy and other grains the last few months, meaning that they have replenished the reserves of soy and other grains, and we will see the demand dropping little by little. On the other hand, the Biden administration is less likely to be confrontational with China, creating trade wars and supply restraints. On the contrary, warmer relationships with China will mean a further increase on supply from American producers back again in the market. And what you see here is decline in demand, surge in supply, and I see a bearish outlook for grains in the medium term. Moving on to the big casino, the Robin Hoodiots' favorite place to be. And what a confusing day it was for them. They have no clue what to do right now, and we see the action at the tables today very confusing. But let's start with which names led the day. At number 1, Apple, per usual, with 1.8 million contracts. 68% of those were calls. Bank of America at number 2, with about 1 million contracts. 70% of those were calls. NEO at number 3 with about 900,000 contracts, 71% of those were calls. But I left the list a little longer today so you can see the action in American Airlines, Pfizer, Carnival, Exxon, Boeing, all of these recovery/comeback names. So a surge in options trading activities. Did we see any interesting trades in the options market today? Yes, we did. But bear in mind, most of these trades are reactionary trades to the action that we saw today. The unexpected vaccine pump that came out of nowhere, although a lot of us have been anticipating that release. So you have to keep that in mind when looking at these options because most of them are wild shots and not significant investment. How do we know that? Because they are less than $1 a piece. They're trading at 20 cents, 30 cents, 40 cents, which means that these traders are just taking wild shots, hoping for the best outcome. But it is also important to read to see where the sentiment is. And when we go through the names, the interesting action here for Bank of America. Yes, we saw a surge of call buying today. However, when we look at interesting trades, meaning trades where the open interest was so low but witnessed significant surge today, we see that the majority of these actions were actually buying puts of Bank of America, betting that the pop we saw today was at least a short-term top, and we will see declines from this point on. And right away, leading the way, Bank of America, the 26.5 puts expiring this week. And that's not it. You see the 26 puts and the 25.5 also being bought. Yet we do see call buying activities in Bank of America. And this is the battle between traders who are buying the move today versus traders who are fading the move. And you see the call buying activities rolling up to 29.5 and even all the way to $32. However, the $32 calls are a little longer dated for next week instead of this week expiration. Notable call buying activities in the reopening names. IMAX, they're buying the $15 calls expiring all the way in December. And of course, the champion of the day, Pfizer. Somebody's buying the 42 calls. That means another 6% or so in the upside by Friday's expiration. This is a wild shot, and we saw significant upside action in Pfizer today. You see bullish call buying activities for JetBlue expiring on the 20th of this month, buying the $16 calls. And we do see AEO, that is the American Eagle Outfitters clothing retail. And this is an interesting trade because it is the same trader buying the $19 calls expiring in December, and we see that they either bought the $15 puts expecting a huge surge in volatility in this name one way or the other, or the most likely scenario is they sold the puts to finance the purchases of calls. And again, this is a very bold, bullish move. When you sell put options in the money and you use the proceeds to buy out of the money call options, meaning that you are almost 100% certain that the name will not decline from this point on and there is only further upside to go. This is how I read this trade. And by the way, you see another shot here for United Airlines buying the 45 calls, expiring by Friday. The same story for Norwegian Cruises and Carnival Cruises. However, for Norwegian, we see call buying in the 25 strike expiring this week. But here's the interesting one. Carnival Cruises, they're actually buying the $18 put expiring by the end of the week. So again, you see somebody fading the move from today, and I think that is the right call, at least in the short term. The momentum in the reopening names will continue, but it needs to take a breather after the massive move we've seen today. Another one for play. This is Dave and Buster, and they're buying the $30 calls. This is a very bold move, by the way, expecting an upside of over 20% by Friday's expiration. Again, all of these are very big, wild shots. It is a casino after all, you have to remember. But here is a trade that perhaps a little more educated. For Boeing, buying the 170 puts, expecting a decline of 6% or so by the end of the week. And I say this is an educated bet because it cost the trader a little bit of more premium. The rest of the trades are less than $1 a piece. This one over $1. So there's a little bit of financial commitment here rather than shooting a wild shot hoping that something will stick. And now to the headlines that shaped the day, starting with the most important news we've heard in a while. The COVID-19 vaccine announcement from Pfizer. They announced 90% success in the trials they've conducted in the last few months. And upon hearing this news, the market blasted higher, an explosion that triggered every algorithmic trading program to buy certain names and fade others. I would characterize today's trading activities as the computers, the robots took over. In the next few days, we will see what human beings would do. And usually human beings are not as intelligent as robots, contrary to common belief. And you see analysts now coming out of the woods saying that we're seeing 45% more upside for Pfizer after the vaccine trial results. And watch these genius analysts who are going to come out of nowhere saying that they are now bullish on cruises and airlines and hotels, and they're going to issue upgrades left and right. When all along they've been telling us continue to buy Zoom and Peloton, DocuSign, Apple, all the overvalued names because the Fed or because stimulus or because whatever. They're going to flip-flop like a lousy piece of pancake. And right away, you see that trading volumes across all markets skyrocketed today, and we saw shortages and errors across brokers, whether it is Robinhood or Charles Schwab. Even Charles Schwab got overwhelmed today, and we saw also E-Trade was down for a little while, overwhelming the system. And again, this is not human beings, Robinhoodians, etc. making these moves. The move today was pretty much algorithmic in nature. Oh yeah, and remember this guy? He is touting the move in the stock market today, saying stock market up big, vaccine coming soon, report 90% effective. Such great news, for the love of God. Can somebody hand him the memo? You lost the elections, buddy. You kept propping the stock market and it didn't do shit for you. Lesson of the day, stop obsessing about the stock market and start solving real issues that affect people's lives. We'll see what the president is going to do in the next few days, but last time I checked yesterday, he was playing golf. So we'll see what he's going to do next. And the last bit of news we have today, here's a reminder from Charles Schwab, Liz Ann Saunders. I missed on presenting this information for you yesterday about the jobs report when we talked about the good, the bad, and the ugly. This is again part of the ugly of the jobs report. Long-term unemployment, meaning for 27 weeks or more, increased from 1.50 million to 3.56 million, pretty much surpassing the highs in 2014. And you gotta keep that piece of information in mind, that yes, we're having a massive orgasm in the market today. Vaccine hopes, stimulus hopes, Biden hopes, end of the year hopes, it doesn't matter. But the facts are that we are a long way from full recovery in this market and the economy, and we are likely to see a high number of unemployment even after the vaccine is already there and COVID-19 is gone bye-bye. Because certain working culture and environment that we have learned during the COVID-19 crisis will remain with us for years to come. perhaps forever. The companies don't need massive offices. They don't need to hire more people. They can be very efficient with people working from home. All of that's going to stay with us, along with high unemployment. So again, I don't want to spoil the party, but just a little reminder of the real state of the economy that you have to keep in mind. And now, moving on to the heat map analysis. And today's market move was very rational, meaning that the algorithms distinguished between individual names in the same sector. They rewarded the names that will benefit from the reopening and the post-COVID-19 era. And they punished the beneficiaries of the COVID-19 lockdown, stay-at-home, whatever you want to call it, meaning that the computers and the robots were very intelligent today. I'll show you exactly what I mean by that. Let's start with the technology sector. Right away, you see Microsoft down 2% or so, Apple 2%, Facebook 5%, you see Amazon 5% again, Google not down at all, actually managed to close in the green. Google did not benefit as much as Apple, Facebook, Amazon, etc. from the pandemic environment. It actually killed their advertising business, but we saw from last quarter it is starting to come back, and perhaps with the recovery after the vaccine, Google will restore its prior advertising margins and gains. Furthermore, you see Nvidia down over 6%, AMD 3%, Intel closing in the green, Cisco in the green, Intuit, IBM in the green. All of these names will benefit from the return back to the office. Yet Nvidia down 6% today. That was a benefactor of all the stockpiling on chips to alter to the work from home environment. Cisco, IBM, and even HPQ, you see HP right here. All of these names sell office supplies and infrastructure, tech infrastructure that is designed for the work from office environment. Let's check out the financial sector. JP Morgan up 13.5%. Bank of America over 14%. Wells Fargo over 10.5%. And you see even the credit cards such as MasterCard up about 10%, Visa 7%. But check this one out. American Express, Amex over 21% gain in a single day. Why is that? American Express is part of our rotation trade, aka the comeback stocks. Visa, MasterCards, they've been rallying along with the tech names that benefited from the stay-at-home culture. However, in the last report, the last earnings report, we found out that Visa and MasterCard are actually suffering from the post-stimulus environment. And they were not, in fact, a beneficiary of the stay-at-home environment. But now that we are back, we're not actually back, but this is the market looks forward. And the news of the vaccine today blasted MasterCard, Visa, but specifically American Express to massive gains. However, check this one out. PayPal down over 8.8%. So again, the market's very intelligent here, distinguishing between which names will benefit from the post-vaccine and which names we should fade, because the run in these names will be over after the announcement of the vaccine. Same story, by the way, for Square. You see Square down 7% or so. Let's visit the communication services sector. We talked about Google, about Facebook, but here is Disney, another name, up about 12% or so on the optimism that the vaccine will accelerate the reopening of parks. Same story with Comcast. You see the contrast here between Disney and Netflix. Netflix down over 8.5%. And you see also video games names getting whacked today. Activision down over 4%. Same story for Take-Two, over 8.6%. Wow. And what do we see? What is that name right there? That red square. Right? Oh, Zoom. Zoom down 17.37%. And perhaps this is the beginning of the air coming out of that massive bubble of Zoom. Stone cold short. Although a lot of people are not going to see it coming. They're actually talking about the decline in Zoom today as an opportunity to buy. We'll see how that one will end up. I remember the people in 2000, when Qualcomm started declining, called it an opportunity to buy. Those people had to wait over 20 years before making their money back. By the way, here's another name, Live Nation. Let's see where it is. Live Nation. Here it is. Live Nation up 14.85%. Let's move down to the healthcare sector. Pfizer right away up 7.69%. The number one benefactor of the day. However, healthcare has two sides. Pfizer's gains will come at the expense of other vaccine developers. And you see AstraZeneca down today because it is a race. Some names will win, other names will fall short. You see Abbott Laboratories down 4.4%. This is again part of the knee-jerk reaction. I think the drop in Abbott Laboratory is an opportunity to buy because we will still need testing kits, matter of fact more of them, until the vaccine is ready to be distributed to the market. But again, from the very beginning, here's a reminder. I told you, stop playing individual names in the vaccine race. Buying Moderna, Pfizer, Johnson & Johnson, AstraZeneca, trying to guess which one will work. Why not buy Mecassin, which will distribute the vaccine either way? And you see Mecassin up an additional 4.44%, and this name been on a tear recently. It doesn't matter which vaccine company will be successful, Mecassin will distribute the vaccine regardless. Moving on to the energy sector. ExxonMobil over 12.66% today. Chevron over 11.6%. Massive bounce for the energy sector. And again, the question is, could it be that you are lucky enough to buy ExxonMobil at the bottom and capture 10% plus in dividends? Or with today's move, just a one-day wonder, and we will see further declines in energy? That is the challenge here. Because remember, COVID is still white hot all over the place. Europe, America, everywhere. And again, we will see pressure on energy prices. However, the vaccine pump is very important for the sector. Will it stick or not? I see the energy sector as the most questionable one in whether the vaccine pump will stick or not. Moving on to industrials. Boeing, right away, 13.71%. Here's another name that we follow. Emerson, 8.8%. Caterpillar, 5.9%. ADP, 2.2%. Railroads across the board. Airlines, massive gains for the airline sector. American Airlines over 15%, Alaska 20%, United almost 20%. You see the picture. And what got punished? UPS and FedEx up 2.6 and 5.6 respectively. Again, showing that the market was very intelligent today. Not perfect, but almost. And let's move on to the consumer cyclical sector. Right away, Amazon down 5%, Home Depot, Lowe's down over almost 9%. And again, the market is punishing the names that benefited from the lockdown environment. And what is being rewarded? Check out this name, TJ Maxx, about 13% in the upside. Even the restaurants industry, look at what the market did today. McDonald's down, Domino's Pizza down over 5%, Chipotle down over 3%, Wingstop down over 5%, Papa John's over 70%, 7%. It might happen 70% and the whole thing goes in bankruptcy, but for now, it is 7.5%. And what is being rewarded? The sit-down restaurants, indoor dining names, which will benefit from the reopening. Case in point, Eat, Brinkers, Chili's, 10% or so. Denny's. You like breakfast? Because check out this name. 36.56% gain today. Cheesecake Factory, 19%. You get the picture. What's going on in the auto manufacturers? General Motors, Honda, all these value names that will benefit even more from the reopening trade are also catching a bid. Cruises, no-brainer. Royal Caribbean over 28.79%. Carnival Cruises almost 40% today. Expedia 24% or so. What about lodging? Marriott over 13%, almost 14%. Resorts and casinos, Las Vegas Sands, MGM, Wynn, all up significantly. Check out this sector right here. We're talking about consumer cyclicals, the leisure section. Peloton down over 20%, Planet Fitness up over 16%. The picture is very clear. Six Flags, as we discussed with Disney and Comcast, Six Flags up 17% or so. And again, Wayfair down 21% or so, Amazon down. The market was very intelligent in sorting things out. Moving on to consumer defensives, Procter & Gamble, Clorox down significantly, Costco, Target, all these names that thrived during the heat of the COVID-19 crisis and lockdowns are now being faded. What is gaining? Coca-Cola, STZ, all the alcohol and beer names, Budweiser. But this is perhaps the most important pick today to show you that the market was very intelligent. Budweiser up 10%. Ambev up 7% or so. But what is down? You see that red dot right there? Samuel Adams, the Boston Beer Company, down 10.5% or so. Why is that? We saw Samuel Adams thrive during the stay-at-home environment because they are more dependent on beer sales in the grocery store, meaning that people buying beer and drinking it at home. Different story here for Budweiser, which is more dependent on wholesale, breweries, restaurants, bars. Again, nothing opened yet, but this is the magic of the vaccine announcement. By the way, what got whacked? Groceries. Check out Kroger, down 6.5%. Now, the move in Kroger and Costco I will characterize as part of the knee-jerk reaction that is not justified. Remember, the COVID-19 crisis is still here. Matter of fact, the numbers are rising by the day. And the gains that Kroger and Costco made throughout the pandemic will not disappear overnight. Matter of fact, more people signed up for Costco membership, and they will continue to shop in Costco even after the pandemic is over. They discovered the gold mine. The same story with Kroger. All the gains they made for home delivery and subscriptions will stick because it is more convenient for shoppers to do it that way. They're not going to lose a lot of the momentum they've gained throughout the pandemic. Same story with REITs. You see any REITs related to malls or shopping doing very well. Utilities, it is the same story. Here is basic materials. You see copper, Freeport-McMoRan up 3.5% today. Same story across the metals and materials sector with exception to gold. Gold got whacked significantly today, and again, it is part of the knee-jerk reaction. I do think, in my opinion, that the decline in gold is premature and we will see a reversal very soon. I see it as a buying opportunity. And now, let's move on to the rotation trade. We talked a lot about some of these names, but let's make the picture a little clearer. You see the declines in, say, Peloton, over 20%. In the stay-at-home names, Zoom, 17%. DocuSign, over 14%. Again, this is the algos taking over, doing the obvious. The algos have less impact in bigger names. Apple, Tesla, Microsoft, Facebook, Amazon. And that is very important to distinguish because it shows you that today pretty much was computers taking over on autopilot. The humans are still in shock. Traders still don't know what to do. Apple holders, Tesla holders, Microsoft, Netflix, they're still not sure what to do. Should they sell? Should they hold? Should they buy more? They're not sure. You will see the human being involvement, the trader, coming very soon, perhaps as soon as tomorrow. And if they decide, hey, this vaccine news is very good for the other side, for the reopening stocks, then we're going to abandon some of our Apple, Facebook, Tesla, Microsoft, Netflix positions and migrate across the aisle. But bear in mind, remember the analogy that we talked about with the pumpkin and mice, the Warren Buffett's example? You will see that happening very clearly, where certain traders, specifically the Robin Hoodites, they will look at Peloton and Zoom and DocuSign's declines today as an opportunity to even buy more. They still did not get the memo, and they will not get it anytime soon. They will continue to dig themselves further and further down the hole, and when it's too late, they will realize that there were no clocks on the wall and they were investing in pumpkin and mice all along. This is the problem when you indulge yourself in the bubble and you don't see it coming. When you continue to buy and participate in the bubble, you become blinded. You don't see it even when it's right in front of you. Just something to keep in mind. Let's move on across the aisle to the comeback stocks, the reopening stocks. We talked about the massive gains in the airlines, cruises, Disney. You see another name such as Cisco, which will benefit from the reopening of restaurants and the normalization, up 16.8%. And by the way, check the call options gains in Cisco today. I doubt anybody got to buy these at 1 cent a piece, but it is just something to keep in mind and to illustrate how huge and massive these gains were in some of the names. Live Nation up 14.85%. It shows a negative sign there. That's an error. The name was up. And again, some of these moves are very impulsive. Check out TJX, Emerson, Planet Fitness over 16%. Some of these moves are very impulsive and reactionary to the algos pumping them very, very high. The human being is likely to get involved tomorrow, and they will see that some of these gains are too much and it's time to take some profits, at least in the short term. This trader that you're listening to right now did exactly that. So again, the human being involvement started as soon as today, but you see it more apparent tomorrow and in the days to come. And by the way, remember, I've been recommending that you nibble and you add some of the comeback stocks in your portfolio all the way back in August. And this is what I actually did. My portfolio is pretty much made of the comeback stocks. Not all of them, but some of them. And it was a rough ride. It was not an easy one, especially during August. But again, the thesis itself was right. Nobody's going to come at your door, a knock, and say, hey, tomorrow the vaccine will be announced. You might want to consider adding some of the rotation trades in your portfolio. It's not going to happen that way. It will happen suddenly, surprisingly, and the majority of gains will take place very, very fast. Case in point. Here is a chart of Emerson Electric. Notice that the pump from today took the name pretty much to the pre-pandemic highs. One day, that's all it took. Another name, Disney, almost back to the pre-pandemic highs. Check out this name, Planet Fitness, made it all the way almost to pre-pandemic highs and reversed from there. So again, a lot of traders are going to start to ask me the question, should I buy cruises? Should I buy the reopening names right now? Where were you the last few weeks and few months when I was saying all along that this will happen and will happen suddenly, very fast, and either you're in the trade or you're not. If you're not, you missed it. You have to wait for a pullback before you enter the game. Again, short covering and stampeding will happen gradually in these names. But for now, after these massive gains in one day, a trader like me has to take some profits off the table. Meaning, if you enter today in these reopening names, you're likely going to hold the bag for a while. And you see right in front of you a chart of Planet Fitness reversed significantly today. It managed to close over 16%, but at the highs, it was almost 90 bucks, trading at 90 bucks. And it closed at 78 bucks. So if you bought at 85, you're holding the bag. Simple as that. And by the way, let's move on and check out my portfolio. What's going on? Here is what my portfolio looks like, with exception, of course, Mekison. I liquidated this name a few days ago. I told you about it after the massive gains in the name, and we covered the chart of Mekison. And in my shorts, I covered my short in Papa John's after the name declined over 20% from the time I decided to short the name. So that is out of my portfolio right now. But what is the investment thesis here for the Maverick Wall Street since the second half of this year? Number one, we will enter an environment of high inflation, lower dollar, higher yields, even though I don't have a bank yet in my portfolio, but I'm looking at Morgan Stanley as a potential add right here. And the second investment thesis is that we will have a vaccine and you will see a massive rotation and reversal in the market. For example, American Express, you saw the gains today, General Motors, Freeport-McMoRan, we've seen the gains on copper, Cisco, Coca-Cola, International Paper, another name that will benefit from the decline of the US dollar. Same story with Mondelez, you get the picture. I have two hedges, the VXX and the short triple Qs, which I added to today. We'll discuss that in the conclusion of this video. But the picture is clear. I'm betting on boring names, reopening names, inflationary names, and I am fading the hot names such as Apple, Nvidia, Clorox, DocuSign, Peloton. You saw massive declines here in DocuSign, Clorox, Nvidia. Not so much in Apple, but that will happen eventually. Peloton was my worst short position. I was buried all the way to my head in this name. But today, the name is down over 20% in a single day and will likely continue to decline because it is overvalued significantly, and the heydays and the peak of this name is coming to an end. So far, this investment thesis in the second half of this year is starting to work. It's been working for a while, with exceptions of the shorts in Peloton, DocuSign, Apple, Nvidia. They have not been working in the last few weeks, but they will start to work as we see migration in the rotation trade. And just to illustrate for you here, let's go back to the heat map and look at the 3 months performances across the board. You see Amazon up 2%, Apple 6%, Microsoft 7%, Facebook 8% or so, Netflix less than 1%, but you get the point. 3 months performance, and these names are under double digits gains, meaning that they're lagging. But check out a name like Starbucks, for example, up 21%. General Motors up 36.6%. What about International Paper? Up about 28%. Cisco up 16.8%. Emerson up 8.54%. Marriott up about 22%. You get the picture. What is the likelihood for me to double my money buying Apple right now? Not so good. What is the likelihood of doubling your money buying lagging names that are likely to recover? Highly likely. And now, moving on to cover some charts, starting with the chart of the SPY 15 minutes perspective. You see, today was no different than the days before. Another massive gap higher. This time around, the difference is the pump got faded, and we have plenty of bag holders at the end of the day. A reversal that hasn't been seen during all the gapping up activities we've done throughout last week. And the first resistance line here is 352. We are likely going to gap lower than that, but you see we have plenty of support lines. Some of them will not be very significant, but some will hold, at least momentarily, for the short term. But for now, we will discuss that later. If we see a massive gap down and a decline in the SPY tomorrow, we will discuss which support lines we have to keep an eye on from all of these lines that you see on the screen. But for now, we're taking one day at a time, and we're looking at 352 as the first one that will go down. Moving on to the daily chart of the SPY, what we see here, this is a reversal candle. There is no ifs, buts, how abouts, howevers, or whatever about it. It is a reversal. It is a mark of a top. We made all-time highs, and we reversed significantly and severely from the highs on high volume, very high volume today. You cannot look at the activities today and not see a reversal coming very soon. Remember, yesterday we talked about the market pumping higher in the beginning of the week, and then we will see a reversal. And I gave you the signs and the signals that you should look for to identify the reversal. 2 of these signals were met today. 1 is not met yet. Keyword yet. We will review everything as we go through the charts. Moving on to the Qs, 15 minutes perspective. And again, we did not see a significant gap higher. The Qs marched just a little bit higher in the morning, but the message was received after the vaccine announcement. And you see that the Qs were faded throughout the day and they're heading lower. This is a reversal again. And with first level, we're looking at a 285.70. That's an error. It says 385.70. It should say 285.70. That will be the first line. I doubt that it will hold. I think we will gap below it. But again, this is the first line we're looking at. And we have 282.30 and we have 2.80 and we have 275. So there are plenty of support lines, but we will take it one day at a time. What do we see in the daily chart? Weaker than the SPY, significantly weaker than the SPY. And again, a reversal candle, no buts, no Fs, no howevers, no anything about it. It is a reversal candle, pure and simple, engulfing the last 2 days of trading activities and heading to close some of the gaps we've created last week. Remember, every time you gap impulsively, as we've seen last week, overnight, you are creating air pockets. Once these air pockets are hit, like we've seen today, you bet that we will see impulsive declines to close these gaps. Moving on to my boy, the VIX. And again, remember, we looked at a weekly chart yesterday and I said the line in the sand is 24.8 and we will pierce through it, but we will reverse during the week. And if we manage to close above it by the end of the week, understand that the damage was already done in the market and it will be a reversal. Of course, I'm not going to wait for that. Today's activities were enough for me at the end of the day to add to my VIX position, averaging lower. And in the comments yesterday, somebody asked me about their position in the inverse indices of the Qs and the SPY and the VIX and what they should do right now. And I said, wait till it goes lower and average down and ride the ride higher. You're probably going to cut your losses significantly or even eke some profits. And this is what we're doing with the SPY. clear reversal from the bottom and recapturing the 24.8 support line significantly. The message is clear from today. What about the TLT? Remember, we were expecting a bounce right away. This is a weekly chart, by the way, because the daily chart is very gappy and has a lot of spaces in between candles. So we look at the weekly chart for the TLT. I was expecting a bounce from the line, the trend line that you see in the yellow right there. We did not get that. We got below, along with the market's jubilous activities in the morning, but we saw a reversal. This was one of out of three conditions that I gave you yesterday. Number one, a reversal in the TLT. Number two, Apple closing below 120, reaching 120, then reversing. And the third condition, VIX reversing and recapturing 24.8. You saw the VIX recapturing 24.8, and you're seeing the TLT reversing higher. And you will see when we cover Apple that it reached 120 and reversed from it. Every single condition for the reversal was met today. The exception here is the TLT, the chart you're looking at right now. We saw a reversal at the end of the day, but it is not decisive yet. We need to see a continuation of the move tomorrow to confirm it. What I mean by that, let's move on to a 15 minutes chart of the TLT. Right away, you see the gap lower. However, at the end of the day, we saw buying activities in bonds. It's still not decisive. I need to see a follow-up tomorrow. And by the way, let's check on the TNX, the 10 years Treasury yields. This one blasting higher, significantly higher, and we don't see a sign and a confirmation of a reversal yet. So again, tomorrow, my eyes will be on the TLT and Treasury yields. Moving on to the dollar index. What do we see here? We see the dollar reversing again, yet not capturing any major support and resistance lines. It's still below the 93 level, well below the 93.5. And again, when we talk about knee-jerk reactions, was the action today in the dollar index a knee-jerk reaction? I do think so. It can't continue for a few days if we have a panic in the market and declines. However, I think that the dollar gains today were a result of the knee-jerk reaction, and they will reverse soon. Speaking of knee-jerk, here we go. Gold, massive reversal candle. Look at that candle, red, going all the way down. And again, I do think this is a knee-jerk reaction, and I expect a reversal in gold soon. Soon as the dollar index is done with whatever pump is having today, it will reverse down. Gold rises higher. And here we go. Apple, the last chart of the day for Apple, 15 minutes perspective. We reached 120, captured 120, however, broke it, reversed from it at the end of the day, and we even pierced below the 117 support line. More pain for Apple, more pain for the technology sector, and again, a big signal for the reversal in the market. And here are some of the trading ideas that I promised you in the beginning, starting with two names to short. Number one, DLB. This is for Dolby Laboratories. And again, I understand that they're involved in more than just theaters. But this name been riding high even before the announcement of the vaccine. It's been going higher impulsively. And now we have reached a very overbought level in the RSI, and we are starting to see that this rally in DLB is running out of steam and forming a very good opportunity to short the name. Moving on to Sony. What do we see in Sony? Check out the MACD reversal, ready to cross the blue line average and create red impressions in the histogram. This is from a daily perspective, so we're not talking about collapse or anything like that. But check out the RSI, reaching the level of 77.38 that I had in my reminder. And what do you know? We pierced through it just a little bit to the upside, and now you see the reversal in Sony. The likely next support is at the 84 level. So if you shorted Sony today, you did very good, but there is still more room to go in the downside. And here are two names that I would buy the dip at. The first name is Kroger. Again, a reminder, the COVID-19 crisis is not solved yet. The vaccine is months away from now. In the meantime, we do have a crisis of the pandemic rising higher and higher in numbers every day. And we are already seeing stockpiling activities in grocery stores. And as a response, Kroger and other grocery store operators are issuing limits in certain items, meaning that the fourth quarter for these names are likely to be very profitable, and perhaps we will climb back very close to the second quarter's gains during the height of the pandemic panic. Furthermore, the gains that Kroger unlocked during the crisis, whether it is adopting more shoppers in their delivery and online shopping platforms, that will stick, that will continue to be with Kroger even after the pandemic is over. Again, I own the name and I see these dips as an opportunity to buy. And I see the level of $30 as very, very solid support to buy the name. The next name is Costco. Look at the whack that Costco got today. Massive decline, huge candle, engulfing candle. Again, I don't think this is warranted. Yes, Costco is trading very high. We have support at 363.5. If that is broken and we go down to 360, 350, you bet that I will buy the name. Again, the gains that Costco acquired during the pandemic will likely to stick and continue even after the pandemic is over. More people sign for memberships at Costco. They shop at the stores for the first time. They adapted online buying from Costco.com. They switched their pharmacy ordering from, say, Rite Aid and CVS and Walgreens to Costco online pharmacy because it is more convenient and it is cheaper. Those gains are not going to evaporate after the pandemic. The retention for Costco is a lot higher than, say, Peloton or Zoom or even Amazon, because when the pandemic is over, after the vaccine, we will miss going out. We're likely to go out to shop. And guess what? Costco is not an online operator only. They have giant stores where people will continue to visit even after the pandemic. If I see further declines in Costco, I am buying and adding the name to my portfolio. And now, let's move on and conclude this video. Number one, we have seen the reaction of computers and algorithms today. We remain cautious and waiting for the reaction of traders. Some traders, like myself, you would think that I will continue to buy these reopening stocks and add to them, right? Wrong. I actually was liquidating and taking profits. I sold 50% of my position in Disney today, taking profits off the table. Not bearish in these names, but I think the gains today were very, very significant. We are likely to see cooling down of these gains in the next few days and then a resumption. That is at least my take. Now, the second thing is, what will be traders, the human beings, other human beings' behavior tomorrow and in the days to come? Number one, let's talk about the Robinhoodians. The Robinhoodians are programmed on autopilot to buy Peloton, Zoom, DocuSign, Google, Facebook, Tesla, Apple, and the majority of them will likely not see that the trade for growth and stay-at-home stocks is pretty much over, and they should start to take profit. They're actually going to see every dip as an opportunity to buy and bury themselves further. But there is another part of the Robinhoodians who just chase whatever the hot trade is. If Kodak is up 10% today, they'll go buy Kodak. If Sorrento is up 20% today, they'll buy Sorrento. And equal, it does, right? They just follow whatever the hot trade is. And now that cruises and airlines and all of these names are popping higher, expect them to migrate to the airlines, casinos, cruises, and stampede to buy these names. Add to that further short covering, and you could see further gains in these names in the days to come. Impulsive day to day, but we're not going to rule further gains in the days to come off the table yet due to the stampeding of Robinhoodians and short covering. Now let's talk about the market's reaction overall. By market, I mean institutional traders, institutional investors, and some of the long-term retail investors. What are they going to do? What are they going to think now? Because today was the knee-jerk reaction, the algorithmic reaction, and now in the next few days, we will have to do the thinking after all the massive gains in the market last week and today. And the thinking goes as the following. Is Mitch more likely to pass a stimulus now after we had quote-unquote good jobs report and an announcement of a 90% successful vaccine? Or is he less likely to pass a stimulus and will lean toward passing an even smaller stimulus? That is a very important calculation for the market to make in the next few days. Furthermore, the COVID-19 crisis is not over yet. The numbers are rising significantly in the US, in Europe. We have not factored in any potential lockdown in this country whatsoever. Will the market think about that and say, look, the pops in some of these names, cruises, airlines, reopening names, are a little premature here, and we should take profits and fade these names. And at the same time, also liquidate some of our technology sector gains, because the likelihood is that these names, the momentum names, reach a ceiling. That is the thinking part that will take place in the next few days and weeks. And by the way, don't forget the elections mess. Yes, we do have a president-elect, but it's not over yet. Further lawsuits and contesting will take place. So again, in conclusion, yesterday we called that the market will pop higher and then reverse at some point. I gave you 3 signals to look for: a reversal in the TLT, a reversal in Apple after reaching 120, and a reversal in the VIX after piercing below 24.8. Almost all of these conditions were met, meaning that we are likely to see a reversal happening in the market very soon, perhaps as soon as tomorrow. So what did I do today? Number 1, taking some profits in the names in my portfolio that popped really high today. Emerson, Disney, etc. Not taking them completely off the table, but taking some profits. Number 2, selling upside calls for some of the names in my portfolio. The implied volatility and the price premiums for calls in these names, the reopening names, popped really high. So I sold some out of the money calls, expecting a reversal tomorrow. And in certain names, we saw the reversal happening as soon as today. Number 3, I added to my VIX position and short triple Q's position, both in stock and options, to average down some of the losses I had in these positions and expect a pop higher in the VIX and the short triple Q's. And if what I'm expecting is going to happen, that means declines in the markets overall, going back to fill some of the gaps in the charts. That is my take, my perspective. I hope this was helpful, and thank you for watching. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.